Have you ever wondered why the market always seems to hit your stop loss before going in your direction? As if someone is watching your trades. What if I told you that it's not just bad luck, but actually part of a strategy used by institutions to manipulate retail traders? And there's a proven method to trade alongside them. In this video brought to you by Learnity, I will show you how the ICT concepts reveal the truth behind these moves and how you can finally stop getting trapped by fake outs, liquidity grabs, and false breakouts. Now, Learnity is a leading online edtech company dedicated to revolutionizing financial education. Our mission is to make finance accessible and understandable for all, regardless of background or experience, through comprehensive courses on forex, stocks, investing, money management, and financial planning. We empower our clients with the knowledge and confidence to navigate the financial world with ease. So, in this video lesson, we are going to be looking at how we can trade using the inner circle traders concept, which is the ICT concept. But before we dive into this topic, I will need you to take a little bit of your time to like, subscribe to this channel, and also hit the notification button so you can get notified whenever we upload new educational content. Now, also do remember that you can earn reward prizes like cash rewards, trading bonuses, personalized trading plan consultation with a mentor, and so on by engaging with our educational content. So the more you engage with our educational content, the more you can earn reward prizes. So to learn more about our reward program, you can click on the link in the description area below. Now, what is the ICT concept? The ICT concept is a forex trading methodology created by Michael J. Huddleston, focusing on how institutional traders, or also known as smart money, manipulate price. Instead of retail tools like the MACD or RSI, ICT traders read the chart through liquidity, market structure, time, and price delivery. If you've ever wondered why the price hits your stop loss then reverses, ICT concepts explain exactly why that happens. Now, ICT concepts teaches you how to follow the footprints of the institutions like banks, hedge funds, and so on and so forth by understanding number one, where they enter and exit, number two, how they manipulate liquidity, and number three, what price levels they target. So, moving on, let's talk about the core components of ICT trading concepts. Number one, we have market structure, which focuses on the break of market structure and shifts in market structure to confirm trend continuation and can also signal a possible reversal. And this also helps identify high probability entry zones, trading the ICT concepts. Number two, we have liquidity. Now, liquidity in ICT concepts means stop loss zones. Smart money pushes price into areas with clusters of stops to fuel their real trades. And there are two types of liquidity. We have the buy side liquidity in ICT concepts, which is usually above old highs, and we have the sell side liquidity, which is usually below old lows. So just like we talked about, we have the first two concepts we talked about, which is market structure and liquidity. So over here we have market structure. This is the traditional market structure that we all know, the higher highs and higher lows. So when you see this, you know that you're in a continuation. And just like over here, when we were in a bullish trend before we broke structure. So you can see we had a high, we had a higher low, and we had a higher high. Now we broke this structure and we started going into the bearish side of things. That is the bearish side of the market. So this is how you know that this is how you know which cycle of the market you are trading in. So you have to look at the market structure to know what side you should trade it on. Now, going to the liquidity area, as you can see here, just like I said, we have two types of liquidity. We have buy side and sell side liquidity. So over here, the buy side liquidity is going to be above the old highs. Meanwhile, the sell side liquidity is going to be below old lows. So these are going to be your targets whenever you are taking trades using the ICT concept. So every low, that is every old low, there's a liquidity below those old lows, and every old high, there is liquidity above old highs. Now, this is also the bullish side of things. You can see creating higher highs and higher lows, higher and higher lows, higher and higher lows. So this is how you know that you are in a bullish side of the market. And in the bullish side of the market, you also have the same liquidity playing its parts. You have the buy side and the sell side liquidity. So the buy side liquidity here is going to be these old highs. So these highs are going to be your buy side liquidity and are going to be your targets whenever you are taking trades. And the old lows are going to be your sell side liquidity. Now, let's say you are taking a trade in this bullish market. You can take a trade here, and your target is going to be this old high. That is, your first target is going to be this old high here. So, taking a trade here, you set your stop loss, and your first target is going to be this old high because it's usually the market is supposed to take out this high here before retracing. So after taking out the old high, you can see it went higher than that high, then retraced before taking out the new old high here. Now moving on to another component of ICT trading concepts, which is the fair value gap. And the fair value gap, this is a gap between three candles where price moves aggressively with imbalanced volume. Now, price often returns to the fair value gap to fill the gap before continuing. And the fair value gap also acts as dynamic support and resistance. Now, if you look here, this is an example of the bullish fair value gap. So we have the bullish and bearish fair value gap. Now, for the bullish fair value gap, you can see we have three. It is usually characterized by three candles, and here we have three candles, right? So we have first, second, and third candle. Now you can see that the weak high of the first candle and the weak low of the third candle, there is a space in between them. That is what we call the fair value gap. Now, if you look here, the weak high of this candle and the weak low of the third candle, there is no space between these candles. That is the weak high of the first candle and the weak low of the third candle. So there's no space in between them. So we don't have a fair value gap here. This is where we have the fair value gap present, because there's a gap between the weak high of the first candle to the weak low of the third candle. Now, this is what we refer to as a fair value gap. Likewise, for the bearish example, you can see the weak low of the first candle to the weak high of the third candle, we have gap in between them. So we call that gap the fair value gap. And if you look at this example, this is where we have no fair value gap. This is a balanced price range because you don't have any fair value gap here. The weak low of the first candle to the weak high of the third candle, there is no gap in between them. So this is a balanced price action here. But over here, we do not have the balanced price action. We have a fair value gap here by gap from the weak low of the first candle to the weak high of the third candle. Now, this is a real life example. That is a real short example of this fair value gap, using them to frame trades. So as you can see, we are in a bearish market environment here. Why? Because we're creating lower lows and lower highs, lower lows and lower highs. And all of a sudden, you can see we have this fair value gap. The market returns to that fair value gap and finds resistance there. You see, it can't go higher than this level. So you can see the market keeps on selling once after filling this fair value gap here. Now over here we have the bullish example also. So you can see we have a fair value gap here. You can see this fair value gap, weak high and weak low of the third candle. We have this gap in between them. And what happens? The market returns back to this level, finds support and keeps on moving higher. So this is how you frame trades using the fair value gaps, trading the ICT trading concepts. Now moving on to the next component, which is the order blocks. Now the order blocks is the last bullish or bearish candle before a major move. These zones show where institutions placed orders. Price often returns to these zones to rebalance or grab more orders, and these zones act as dynamic support and resistance levels also. So as you can see here, we have this is a bearish example of another block. So this is what we call a bearish order block. So you can see we had these consecutive bullish candles before the bearish movement. So we are going to be taking these bearish candles as our order block. And to the other side, which is the bullish order block, we have the bearish candles. So we have these three consecutive bearish candles before they move higher. So these consecutive bearish candles are going to be what is going to stand as our order block. So this is what we refer to as order block in the ICT trading concepts. Now over here, we have an example. This is a bullish example, a bullish trade example using the order blocks. So as you can see, we have this multiple bearish candle here before the bullish movement. So this acts as another block. Mark that out and you wait for price to come back to these levels to retest. As you can see clearly, it does that here beautifully. And what happens after it comes into this zone? This order block acts as support level here. It keeps price from going lower and sends it back upwards, resuming the current trend. Now over here, we have the bearish example of the order block in action here. So as you can see, we have this bullish candle before the bearish movement. Now this bullish candle is going to be acting as our order block. Mark that out and you see how price retraces into the order block, finds resistance there. Tends to go down, but faces support here once more, comes back to the order block here before dropping lower. So you can see how these order blocks played its part as a resistance level here. We use this to frame this trade and you can see how the trade played out beautifully. So guys, if you want to continue learning more trading concepts like this, you can take up our 5-day free training available on our platform. Now, this free training is designed in such a way to guide you through the simple and advanced concepts in trading. So, if you're interested in taking up the 5-day free training, you can click on the link in the description area below. Moving on, in the next section of this video, I'll be taking you through the personal learning area, the core entities personal learning area, to talk about the courses section of the personal learning area. So over here is the core entities platform. This is our homepage. Now, for the essence of this video, I'm going to be logging into my core entities account. So if you don't have an account and you want to open one, you can click on this diamond icon here, and that should take you to this page where you need to fill in these credentials, fill in these boxes to create an account. But you can also choose click on this continue with Google button if you have a Gmail address and skip through these steps here. Now, if you want to do that and you don't know how to do that, you can click on the link in the description area below to learn how to create an account on Learnity. Now, going back to the home page, I want to log into my account. So, if you want to log in, what you need to do is to come over here and you click on the login button. Now, clicking on the login button is going to take you to this page where you need to fill in your email address and your password. But for me, I created this account using Google. So, what I need to do is come over here and click on continue with Google and give that time to load. So once you click on this, it should bring up this dialog box here where you need to select your Gmail account you want to use for this specific purpose. Now, this is the Gmail account I want to use. So what I need to do is to come over here and click on that and allow it to load. Now, after selecting your Gmail address in the previous page, that should log into your account and bring it to your dashboard. Now, this is the personal learning area dashboard. Now, we are going to be talking about the different sections of this dashboard, especially the courses section of the personal learning area. Before we do that, I want to talk to you about the stream section of the personal learning area. Now, the stream section is your go-to feed where we drop all the latest videos, updates, and helpful content. It's the easiest way to stay in the loop and catch up on what's new in the forex trading world. So, if you want to do that, you can take advantage of the stream section of the personal learning area to stay up to date with what's going on in the forex world. Now, also, I would also want to talk to you about the reward section of the personal learning area. Now, the reward section of the personal learning area allows users to earn coin Learnity tokens by watching videos in the rewards area. By engaging with these videos, users can accumulate tokens, which helps them progress towards earning badges and unlocking other rewards. It's an easy and fun way to learn while you also earn, continuing your learning journey. So, if you want to take advantage of this reward section, what you need to do is to log into your account on an everyday basis and also watch the videos available in this reward section. Now, once you watch these videos, you gain knowledge, that is, you gain financial knowledge. At the same time, you earn tokens, which can in return fetch you reward prizes on the personal learning area. And also, I would like to talk to you about this notification icon here. Now, what does this do? This alerts you, that is, this sends you alert whenever we are holding important events on the personal learning area. Important events like whenever we are giving out cash prizes, trading bonuses, and so on and so forth, you get alerts if you are subscribed to this bell icon here, this notification icon here. Now, how do you do that? You can see I'm already subscribed to this to the notification here. So if you want to subscribe, what you need to do is to click on it, and it should bring up. If you click on the bell icon, this notification icon here, it should bring up a dialog box for you, which you see the subscribe button there. So what you need to do is just click on the subscribe button, and thus should successfully subscribe it to the alerts. So whenever we are holding important events, you're going to get alerts about these events. Now, moving forward, let's talk about the courses section of the personal learning area. Now, if you want to continue learning more trading concepts like the one taught in this video, you can take up any of our educational courses available on our platform. Now, these courses are designed in such a way to guide you through the beginner to advanced concepts in trading. So if you're interested in taking up any of our courses, you can click on the link in the description area below. So once you click on the courses icon here, you should just give that time to load to take it to the courses page. So just click on it and give it time to load. Now, after clicking on the course icon in the previous page, that should bring you to this page, which is our course page. And if you scroll to the bottom, you're going to see the list of courses we have here. Now, if you want to learn more content, or more, more concepts like the one taught in this video, you can take up any of the premium courses here. So we have the ultimate forex trading course, and also we have the advanced forex trading course. So let's take, for instance, I want to take up this course because these are the courses that contains the ICT concepts. So let's say I want to purchase the advanced trading course. What I need to do is to click on it and give it time to load. So after clicking on the advanced trading course in the previous page, that should bring you to the course page. So this is where you get to learn more information about the course. So as you can see here, we have the different modules and the different topics available under the course. So if you can go through the courses here, that is the course modules and topics here. As you can see, these are the course topics. We have about 3 pages of this information. So if this is one of 3 pages, if you want to view the next page, click on this arrow button and that should load up the next page for you here. So as you can see, it has loaded that up. So these are the different, as you can see, these are the different topics taught in this course. We have definition of order blocks, just like we mentioned in this video. We talked about order blocks, Beverly gaps, and so on. So order blocks, dealing ranges, breaker blocks, Beverly gaps, and so on and so forth. We have Beverly gaps here. So if you want to take up this course, what you need to do is to come over here and click on the take the course button here and allow that to load. Now, after clicking on the take the course button in the previous page, that should bring you to this page where you need to select your preferred payment method. So as you can see, we have different payment methods. We have the local payment method, the bank transfer payment method. We have the international payment method, and we have the African payment method. So you can use any of these methods to purchase this course on the personal learning area. So guys, that will do it for this video. Do not forget to like, subscribe to the channel, and also hit the notification button so that I can get notified whenever we upload new educational content. I will see you all in the next video.